Okay, so let's go ahead and take a look at our, how we're tracking this S&P 500 election year seasonal pattern. And again, what you've done here, I mean, you're looking at the data from 1949 to 2023. Tell us how we're tracking so far.
Well, the red line is our aggregate cycle. That's a combination of all years, this 1 year seasonal pattern, election year seasonal pattern, and then the fourth year of the decade, like 2024, 2014,
Mhm.
04, that kind of stuff. And you can see, the red line's a bit more, flatter. It's more things that are averaged out there. But when you put in the sitting president in the black line, and then the sitting president without 2020 because we had the COVID situation, which showed that a little more pronounced sell off there than we had. You're looking at a pretty bullish trajectory with that big black arrow pointing higher. But this year 24. Now this is just at the end of May. We don't have the last few days in there, but we all know what's happened there. We're up at a new high. It's cantilevered well above the average. So what this means for us here is two things. Number one, the market's much stronger than normal, and number two, we're likely to come back to the mean a little bit, at least partially over time. So we're looking at a potential for a little, more sideways, a little chop here as we, let the historical patterns catch up with the current. But all of this bullishness is supportive of a bull market and continued strength in the market. So not much to get negative about here, other than the fact that maybe all of the great gains you've had so far, might be a little harder to come by moving forward, at least for a little while, while we get into the until the conventions are done. Not that we don't know who the candidates are going to be.
Right.
We've got, which is another point that we want to get to, that we've covered. We've got two known entities here. One of two previous presidents is going to be, in office unless something changes, some weird swan event of some kind. Right. And that reduces the uncertainty factor. I think several of the Wall Street CEOs are like, whoever's in, we'll be able to adjust. We know what to do.
Yeah, we know what's coming.
and the market's performance this year is supporting that and reinforcing that the market knows what's coming, so it can be prepared to go higher and continue to go higher.
And let's go ahead and let's take a look at the Nasdaq. Now the Nasdaq was a little bit wilder, I guess. I mean, whereas the
more volatile.
Yeah, more volatile. I guess that's the technical term, but I'll just go with wilder right now. Whereas the S&P 500 certainly, as we mentioned, came down in April. It was still tracking well above, the blue line and the black line here. But, for the Nasdaq, we were kind of getting into, it came right down. Yeah, back to the mean. So, but, as you mentioned, hey, now we're back, just kind of project out a few days here. We're right at highs for both the Nasdaq and the S&P 500, well extended above the norm. And, there has been kind of a little bit more chop. It's felt like there's been rotations about to happen. This is certainly felt like a market where if you bought on strength, sometimes that's tough because then like a rotation happens almost immediately. You definitely have the market, the market as it stands. If you're looking at the Nasdaq, S&P 500, you've got some big, heavy market cap weighted instruments that are really kind of driving those indexes forward. Sometimes you don't quite get the participation of everybody. It's just that if you've got, a handful of stocks with these big market caps, you're doing just fine, right? Does any of that come into play? And you have any thoughts on that?
Well, I mean, we always have market leaders, and we're still in the queues. We're benefiting from that. I'm okay with a handful of stocks leading the market. I don't like chasing stocks. I'm not into just getting into stocks because they go up. We like things that are great valuations, showing some strength, but kind of under the radar. So I don't think anyone should be chasing anything right now. We're in pure, full cautious mode right now as we're getting into the worst 6 months. We're between the end of the best 6 months and into the end of the best 8. So there's no reason to jump in here and go crazy. We
Mhm.
can earn some money in bonds and but we are rotating. You were mentioning rotating sectors. We like staples, healthcare, and we've been in utilities for a couple of months now. We're starting to get benefit from that. So it is time for rotation. I mean, people talk about sell in May and go away. I say reposition in May.
Okay. Yeah.
Rotate.
Rotate. And just one more thing on the chart here that I want to point out, because
Mhm.
we do have the conventions coming up, and
Yeah.
it looks like typically we've got election year summer chop ahead of conventions typically. So maybe talk a little bit about that.
Well, that's sort of what holds the market back a little bit until it has a clear picture as what the two choices are going into the election time. And you can see that represented on this chart here. I got a little, down arrow or sideways arrow up a little bit down there. Nothing of any consequence on the downside, but you're also talking about the summer period where people tend to do some different things. You tend to see, the end of July kind of weekend, as people take off and
Hmm.
vacation and step away from the market. And, then you're starting to pay attention to what's going on in the political conventions. And it just draws attention and money and trading away from the stock market. So again, I'm not expecting any major upside or downside over the next couple of months. But when we get closer to the election and to the end of the year, I think we're going to have a nice rally again and see more new highs.
Yeah, and that's typically what happens. So we've got a little bit of time to kind of potentially go through this chop before things get really strong, at least historically. And one last chart I wanted to kind of end with, because I don't think that we really kind of covered this, but
Mm.
since we're in June, let's talk about what typically happens in June. It's the third best S&P 500 month in election years.
It's the third best month for a few of them. We just picked that one because that's what everyone follows for the headline there. But you can see the Russell doing pretty well. That may have something to do with the rebalancing that happens. But in general, if you can use your mind's eye to picture the last few trading days, it looks real close to what the seasonal pattern is, both for the recent 21 year and the longer term election year pattern. So you and I have covered the 4 year cycle, the big chart that I've shown you, where these 4 years are tracking those 4 years, and the longer it stays tracking, the more it's likely to continue tracking. We're seeing that happen again here, in the near term with just the election year June pattern. So people just gotta be a little patient, and
Mhm.
everyone wants to have to buy something new every day.
Right.
Was it Buffett that said, cash gives you times to think or something like that?
Hmm.
It's okay to wait. Like
Yeah.
what stock are we buying today? I don't know. Maybe not. Maybe not buying
Hmm.
anything right now.